Hi everyone, my name is Hina and I'm a chartered accountant with a decade of experience in internal audit and risk advisory services. I have worked with the Big 4, with investment banks, and various manufacturing and pharmaceutical clients in their internal audit and risk divisions. In the last few years, I've also interviewed a lot of candidates for various positions in internal audit. So if you are a CA student, a fresher, or a finance professional who's transitioning into internal audit, then this video is a must watch for you as it will definitely boost your chances of getting hired. So let's not delay and get into the questions. So firstly, I will cover certain very common questions that are asked in any interview that you appear for. So these are generally profile agnostic, and it is quite common that you will definitely come across one of these questions, which includes tell me about yourself, and why are you interested in joining this company? What do you know about this company? So I would highly recommend that whenever you're applying for a role, you definitely read up about the company. So go through the website, see the latest news, if there's anything in terms of business expansion, any merger, any announcement, any change in leadership. So you need to be familiar with such things whenever you're interviewing for any company. Then, of course, what are your strengths? What are your weaknesses? Why do you want to leave your current role? So this is definitely something that you will be asked if you're already working. And a tip would be not to badmouth your existing company. Be professional and definitely highlight that you're looking for more growth or looking for something that aligns to your skill set or aspirations. What are your career aspirations? So typically also be asked like, where do you see yourself, say 2 years down the line, 5 years down the line. So make sure that your answer is in line with what the role is and is aligned to the profile you're interviewing for. And of course, what are your salary expectations? Now, I'm not going to spend too much time in terms of how you need to answer these questions, because these are very basic and very common. And what I'll do now is talk more about questions which are specific to internal audit profiles, okay? So especially if you're a beginner, a fresher, then definitely interviewers want to know what do you understand by internal audit. I've seen some candidates who are just not able to articulate and have no idea, but they just see the brand name of the company and apply without understanding anything about internal audit. So it is definitely more relevant for beginners and entry-level professionals, where you need to articulate what exactly is your understanding of audit. So an internal audit is definitely a function which is independent and which provides assurance, which helps to mitigate the risk of an organization. So throughout the audit, you're looking at risks and controls, right? And this is very different from a statutory audit. So a lot of times, especially if you're CA, if you're trying to appear for articleship interviews or just appearing and starting out, then you need to be very clear about this difference. It's very basic, that a statutory audit is something which is concerned about an entity's financial statements. So the auditor provides an independent opinion on financial statements, whether they are true, whether they are free from any material misstatement. And the report of a statutory audit is available publicly, especially for listed companies. You'll find it in the annual report. Whereas an internal audit is concerned with the risks and controls. So it's more for improving the control environment and mitigating the risks faced by an organization. And it's typically confidential and it's not available publicly, and it will be shared with the board of directors, with the management, with the audit committee. So this is bare minimum that you must know if you're a beginner. If you have any experience in internal audit, then you can also add that you've already worked in audit and you know how it works, and add your experience here. Okay? So next is what is meant by 3 lines of defense. Again, it is more to gauge your understanding about the risk management and internal audit framework as such. So in any organization that you work, that you see, there are typically 3 lines of defense. So risk management is everyone's responsibility in a company, but it's categorized differently. So the first line is typically the functions which are involved in day-to-day operations and day-to-day, like they are the ones which kind of the foundation of the company. So like sales, procurement. So it's not necessarily that they are the revenue generators, but any function which is like very critical for the business, those are the ones which own and manage the risk because they're directly involved in operations. So you can think of it like your sales department, your trading department, procurement department, right? So these are all your first line of defense. Now the second line are the more are the people with a bit more experience in risk and compliance. So these you can typically think of as your legal department, tax department, compliance department. So what they do, they help the first line to mitigate the risk. So they work very closely. They also independently sometimes review the work done by first line to see whether the risk is sufficiently mitigated. But internal audit is the third line of defense. So, whenever there's a potential of something going wrong, the first line is the first person who's kind of trying to prevent it or detect it. Next is your second line. And lastly comes the internal audit, which is completely independent. It's your third line of defense, and it sits independently and audits the first line or the second line, and then tries to give recommendations to enhance the control environment. So that's a bare minimum understanding of the 3 lines of defense. Now, if you get into technicals of internal audit, now it definitely, like we said, it deals with risk, process, and controls, right? You're looking at the control environment. So you need to know what is a risk, what's a process, what's a control. So it's very basic again. So if it is a process, now every organization has certain processes, which is nothing but a set of activities that you perform to achieve a goal. So it could be procurement, it could be HR, it could be any process. Now, risk is the possibility that something can go wrong, right? Something can negatively affect the achievement of your objective. For example, a risk of fraud, a risk of a potential cybersecurity breach. So that is nothing but your risk. Now, lastly, we have control. So whenever there's a risk, how do you prevent that risk? Through having controls, right? So a control is an activity that will help you to prevent a risk or detect a risk. So that's why a control can either be preventive, it can be detective, right? For example, if my risk is that anybody can, purchases can be made, can be unauthorized, right? So the control is that the purchases can be approved only by, say, a senior purchase manager. So that is how we have a process, risk, and a control. So this is something that if you are asked, you need to be articulate. And of course, what's the difference between internal audit and internal control? No, they are not the same. So don't answer that these are the same things. A control, like we said, is something that helps you to prevent the risk, whereas an audit is an entire function, right? Which is an entire activity which will provide an opinion on whether the controls are sufficiently designed, operating effectively, and whether they are mitigating the risk. So make sure that this bare minimum information you know. And sometimes you get asked like tricky questions, especially at entry level. Like, can an internal audit completely eliminate risk? No, it can't. So no audit can ever completely eliminate risk because risk is inherent and there are inherent limitations of audit. All it can do is help an organization to mitigate the risk. It cannot completely eliminate risk. So all organizations have certain risk tolerances, and internal audit will definitely help an organization to ensure that the risks are within the acceptable limits. And can internal audit report to CFO? Now, as we have been saying, it is an independent function. It's the third line of defense. It's completely independent. So no internal audit cannot functionally report to the CFO. The reporting has to be to the board of directors or audit committee to retain independence. So we do not want a situation where there's a conflict of interest, which can happen especially if the audit is trying to report issues on finance or accounting or any of CFO's decisions. So that is why it cannot report to the CFO. Now, coming to how do you perform internal audit? So this is a good opportunity. If you are asked this, then you can showcase your experience, like, give a background of what you did for a specific client, how did you approach it. But typically, if they are a fresher and you do not know, then you have to give them like the steps of how internal audit works. So it definitely starts with the planning phase, wherein you identify what are the processes, what are the key risks in those processes, what are the controls already in place, and then you have to define your audit timelines, your budget, and release your announcement letter. So the first phase is definitely your planning. Then it comes to your field work, which is your audit execution. So this is the phase where you actually go and test the controls. You test the design of the control, and you also test the effectiveness of control. And I'll cover both of that shortly. And lastly, after the field work is done, you will do a reporting. So that is basically after you have tested, after you've done a sample testing, if you've identified any issues, then you will talk to your stakeholders, talk to the audit departments, tell them that these were the observations, these were the findings, then ask them what they can do to mitigate those findings, right? So you will have your action plans, your finding remediation plans. So then after collating all of that, you will finally release your audit report, which will include all the findings that you identified, what was the risk ranking or classification of those findings, along with the finding recommendations, like your recommendation as well as management's agreed remediation plan and timeline of thought. So all of that is circulated to the management. So that's how the internal audit process typically works. Now, we also spoke about test of design and test of effectiveness, especially during the field work phase of the audit. So if you're asked this, then you need to know what's the difference, right? So a test of design is specifically focused on the control structure. So you're not actually seeing whether the control is being performed. You're just checking whether the control exists and whether the control's design is okay, whether it's appropriate. So what do? You take only one sample. You're not looking at the entire data. You're going to pick one sample, see it from start to end. Like, you will check who has performed the control, whether that person who's performing the control, is he or she qualified? Are they competent? Do they have that authority to perform that control? Then what's the control frequency? Am I going to do this monthly, daily, yearly? Right? What is the type of control? Is it something that's preventing a risk or detecting a risk? So all these kind of parameters are what you check when you do a control design test. And you just check one sample, okay? Now, that is different from a test of effectiveness. Test of effectiveness is actually concerned with whether the control is being performed. So here you are concerned with actual performance. So you do the sample testing. So you will check certain samples in your audit period and then test those for specific attributes. Okay. So for example, when you do a test of design for a payments control, you would just check whether there's a control to ensure all payments are duly approved. But in test of controls, you will actually check, in your test of operating effectiveness, you will check whether all the payments in a particular period are approved. So you may do a population testing, you may do a sample testing typically for a certain number of samples. Okay. Now, also interviewers sometimes ask, so if you've done a test of design, then and that control has failed, the design itself is failing, will you still perform a test of operating effectiveness? So typically, if the control itself is a poor control, it's a weak control, then you as it is have an observation and finding in your hand. So why would you spend more time in testing samples, right? So you will not do that. So typically, if the test of design has failed, then you will not go and test further samples. But sometimes it happens that you have to quantify the impact of a finding. So say your control has already failed, and now you want to know how many instances in the audit period have failed. So for that, you may do a test of effectiveness. Next, how do you select samples for control testing? So now sample selection methodologies are generally defined by every company, especially if you're working within the internal audit department of a company, right? So you need to be very clear here that the sample selection varies based on the type of control and the frequency of the control. So typically, higher control frequency, you will definitely select higher samples. And this is true for a manual control, because whenever there's a manual control, there's an inherent risk that the control may be bypassed. So you will pick more samples based on the frequency of the control. So if it's an annual control, you'll just select one sample. If it is a quarterly, you may select 2 to 3. If it's a monthly, you may select 4, 5. If it's a daily, you will select a higher sample like 25 or so. Like depends on whatever is defined in the methodology as well. But if it's an automated control, then you will only select one sample. You will not select more than that because test of one is enough because it's an automated control itself, right? So that's something that you need to be aware of. And now, a lot of times there are roles which talks about like SOX compliance, and also you definitely need to have a brief idea about what SOX is, right? So it is a US-based regulation, which is definitely to improve corporate governance, to improve the quality of financial reporting, and to prevent frauds therein. So you can say that, of course, SOX requires like the CFO and the CEO to attest, the accuracy of financial reports, and that requires the internal controls to be, attested, and companies need to report on that. So it's not necessary to know the sections as such, but understand what's the intent of SOX and how it is different from IFCs, especially when you're interviewing with listed Indian companies. Then they would want to know what's the difference between SOX and IFC. So SOX is a US-based regulation, whereas IFC is something that was introduced in the Companies Act, right? And the scope is a slightly broader for IFC. So SOX is only concerned with controls which directly impact your financial reporting, whereas IFC, it's concerned with all types of controls, be it financial, operational, compliance controls. Okay. For example, if there's a control for revenue recognition is going to directly impact your financial statements, right? So that's your financial reporting control. But if it's a control on, say, monitoring of attendance of employees, that's more of an operational control. Similarly, compliance with certain requirements, say registration under certain acts, certain statutes, that's your compliance control. So IFC has a broader range, whereas ICFR, or whatever you call as internal controls of financial reporting, that's nothing but controls specifically focused on financial reporting only. So that is why you need to understand these differences. Basically, your ICFR is a subset of IFC, okay? And SOX versus non-SOX control is also something you need to know. So any control that is going to materially impact your financial statements will be classified as a SOX control, okay? So if you want to know more about this, then do let me know, and I'm happy to have a separate video on all of this in detail. Moving on to certain other questions. Now, it's very, very common that you will be asked questions on certain processes. So if you are auditing a specific process, what are the key risks? And as you're already aware, there are different processes. Most of these which I'm sharing right now are very common to any company. So it is O2C, which is your order to cash, your revenue side, then your procurement to payments, which is your procurement side, HR, then record to report, which is nothing but the function which deals with your financial reporting, financial statement, closing procedures, all of that. Then ELC is representing your entity level controls. Then you have tax, cash and bank or treasury, as well as IT application controls and general controls. Now, typically, you can expect the interviewer to ask you things like, hey, what are the top risks in the P2P process? Or can you tell me the P2P, cycle? What are the key sub-processes? So you need to be confident and be able to answer the risks. And it is very important to know here what's like a risk and control matrix, what kind of risks are there in the process. So for example, if I talk for P2P, it will start with, say, the vendor master data management, vendor selection, procurement requisition, then purchase order creation, purchase order processing, goods, then after that you have your goods received note, all of that, right? Then finally, you have all of that three-way match, then you have invoice processing, then you have payment processing. So you need to have like a clear understanding of what all sub-processes are there and what are the key risks. So for example, if it's concerned with like a purchase order, like possibility of having duplicate POs, possibility that the POs are unauthorized, possibility that the POs are split to bypass approvals. So all those kind of risks are there. So these are very high level things, but you need to know it in detail. Of course, it's not possible for everyone to know everything, especially at a very entry level, mid level. Also, you may not always have the opportunity to cover all of these processes, and that's fine. I would recommend that if you are someone who has experience, then at least be confident about the processes that you've already had some exposure in. It would be good to know at least two processes in depth, so that if the interviewer asks you something that you don't know, then you can always say, hey, I do not know about HR, but I can talk about O2C. So do you mind if I talk about O2C instead? So something that gives you also a good edge and gives the interviewer also comfort that yes, you know something, and then you can talk more about the process you are confident about. So you must know all of this, especially for manufacturing clients. In financial services industry, when you interview, they typically may not have these processes, but they would still, if you have experience in these, then they will still ask you questions about these just to know what's your risk mindset, how do you approach this, are you familiar with the basics, right? Now, if you want me to cover all of these processes in depth, then please let me know in the comments, and I'm happy to cover every process in depth. And if you want personalized guidance, then I'm also available on TopMate, as I have interviewed a lot of candidates and I've screened a lot of resumes. So I exactly know how you can stand out and how you can boost your chances of getting hired. And I can also help you do mock interviews and give you personalized guidance. So if you're interested, then don't hesitate to contact me. I will put the link in the description below. And lastly, like we already said, that there will be scenario-based questions and case studies. So that is something that you must, be aware of. Especially these could be ranging on the processes which we just talked of, like P2P, O2C, or it can be that the interviewer just gives you a scenario that, hey, this is the process in my company. What do you think is the key risk here? Or it could be a detailed case study, wherein you are asked to prepare like an answer and then share it with the interviewer. So both those things also happen. Then, of course, questions based on your audit experience. So if you have already worked in a Big 4 or at certain clients, and what kind of audits you did during your articleship or during your internship, you need to be very confident and clear and articulate that experience clearly. They typically ask you about the kind of findings you had identified. So even here, sometimes I've seen that candidates just randomly go to the finding without giving any context, and they're not very clear. So whenever you talk about your audit finding, give them a background very briefly, and then speak about the finding very clearly. And you must also highlight what's the risk. It's not like, okay, fixed assets were missing. Why were they missing? What is the risk? What was the root cause of the finding? How did you identify it? And why do you think it's a significant finding? So all of that, be very clear, very concise and confident in your articulation here. And lastly, like we've already said, questions about the company you're interviewing for. And this need not just be questions like, okay, who is the leadership, or what do you know about the company? It could also be a very situation-based thing. For example, if you're interviewing for a pharma company, then they may ask you, what are the risks that you foresee in our business? What are the key risks? So definitely, like if it's a pharma company, you will say that, of course, supply chain is an issue, regulatory risks are high because health related compliances are high. So you need to be clear, and you need to demonstrate here that you are able to think through and have a very sound and logical risk mindset. So yeah, these are like some of the key things that I thought would be very helpful for you. And this is typically, if you have prepared this far, then you will definitely boost your chances of getting hired. And yeah, I wish you all the best for all your interviews. And if you like, then don't forget to subscribe. I will be posting a lot of useful content for all aspiring audit professionals and for CA students and freshers. So don't forget to subscribe. Thank you.